This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. You can follow Planet MicroCap on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 158. If you have any questions or comments, please feel free to tweet at me or shoot me an email at rkraft@snnwire.com. And when you do get a chance, if you like what you hear, please rate and review Planet MicroCap on iTunes. It really helps provide feedback for me and spread the MicroCap message. What a week last week. Had an amazing interview with Annie Duke, and I made my live television debut on Making Money with Charles Payne on Fox Business. And I just wanted to start off by thanking you all for your kind words and support. Live TV was easily the most terrifying experience thus far in my career. But I'm really jazzed about another opportunity at some point in the future. So thank you, Charles. Thank you, everybody who tuned in, and hope I did everybody proud. Also, another quick announcement: our next investor event is our main event, the Planet MicroCap Showcase Virtual, taking place April 20th through 22nd, 2021. The website is now live, and you can find all the details on the event at www.planetmicrocapshowcase.com. Registration is open, so click the register button once you are there. A lot of updates that'll be coming your way as we get closer to the event. Speakers, keynotes, presenting companies, the whole deal. So go register so that you can stay updated as we keep putting out more information. So I'm very excited about this year's event, and I'll see you all there. This week from the SNN Podcast Network, we have the following shows coming up. On Avoiding the Crowd with Maj Sway-Don, we just published an episode titled Crypto 2021. Is it 2017 all over again, or is this something else? In the last few months, the digital assets market has seen quite a run-up, and Noah Goldberg recently joined the geo-investing team to cover the crypto market. So Maj invited him on the show to share with you all of what's happening. So you can see this episode and listen, watch the whole deal on Apple, Spotify, YouTube, or Podbean at avoidingthecrowd.podbean.com, or also on Maj's website at geoinvesting.com. And we also have a solid show on tap for the Investors Roundtable. This week's topic is the gamification of the stock market. I actually brought this up in my interview with Charles Payne last week, and it's become the new hit phrase on all the mainstream media shows. So obviously, we have to contribute to the conversation. You can watch this episode on the SNN Network YouTube channel at www.youtube.com/SNNWire. Now, for this episode of the Planet MicroCap Podcast, I spoke with Francisco Olivera. He's the president of Arevilo Capital Management. I had Francisco on a recent episode of the Investors Roundtable to discuss the future of media and streaming services. And we thought it would be fun to have a full conversation about streaming services. Look, I will find any excuse to do a podcast talking with colleagues about our favorite shows and podcasts. But despite thinking that we would do that primarily, we actually do get into discussing various business models, what's working, what's not, and more. Thank you again for tuning into episode 158 of the Planet MicroCap Podcast, and please enjoy my conversation with Francisco Olivera. Welcome back, everybody, to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and I have a great guest for you today. Honestly, I don't even know if we're going to get to the businessy side of stuff. We might. I don't know. We both share a huge interest in every comic book movie, and with series coming out on Disney Plus and Marvel and Stars and all that. So we might just be talking about all that stuff. No spoilers, of course. But in all seriousness, I'm very excited to have him on today. We got Francisco Olivera. He is the president of Arevilo Capital Management. Francisco, thank you for joining me today. How you doing?
Awesome to be here, Bobby. How's it going?
Listen, it was funny. We had this scheduled for 3 p.m. Pacific, and we spent the first 20 minutes just catching up on shows right now. So I mean, look, I don't know if we're going to get through some of the main topics we wanted to talk about today, but it's all related.
Yeah. Well, I mean, we can get it investing related in terms of the shows and which ones are good stocks. So yeah, it's also all interconnected.
That's for sure. All right, man. Well, let's give some people some perspective on who you are and how you got to where you're at today. So before we get into the fun stuff, this is fun too. Don't get me wrong, But before we get into the, talking Mandalorian and a little Wonder Woman 2 or anything like that, let's start with your background. Where did your passion for investing begin, and then what led you to Arevilo Capital Management? So take it away.
I think it began late high school and then kind of accelerated and got juiced up in college. My father, who's my mentor, is in the investing business and asset management business, and he gave me Joel Greenblatt's book, the little book that can beat the market, the little blue book. And it was a very, very easy read for someone who, didn't know anything about numbers or business at the time or the stock market. And it just kind of, he talked about Buffett, talked about value investing, talked about buying good businesses cheap. And at the time, of course, I thought, yeah, just do a screen, buy at a low multiple if it's a good business, and it's easy, Markets aren't efficient. But of course, you start reading further, start reading about other investors, and just the game gets harder and harder as you learn more. So in college, I sucked myself into reading about investing and investors, and I went to Bentley University, and then thought that post graduation it'd be good to get an investment banking background to get trained and do analysis and modeling and study corporate activity and understand capital structures and valuation. And I thought that would be a good background to eventually getting into investing myself. So I went to JP Morgan, and I very appreciative of my time there. It was a lot of work. It was tough years. It's like going to a boot camp of sorts. I'm from San Juan, Puerto Rico. I came back here after finishing my 2-year analyst program at JP Morgan, and fortunate enough to be able to partner with family, including my father, who's my mentor and also part of the business, and launching Arevilo Capital Fund. And we launched in 2014. So it's time has flown by, and basically the strategy is concentrated long-term investing. And very general terms, and many of your guests have probably said the same thing. So we all have our own flavor based on our personality. So I think that's probably the fun part to discuss. But that's a little bit about my background.
Very cool. Yeah, no, I mean, look, that's a perfect segue. I mean, as you said, everybody has their own flavor. I mean, I think you're becoming well known for you looking at, media companies and streaming, just across the board, media entertainment. And so it's so much so I actually had you on the Investors Roundtable episode not that long ago, talking about streaming services and the future of media. So it's only right to have you back individually to talk about this space and what's happening, what's changing. So, the thing that I thought would be really fun today is that, we talk about Disney, Marvel, and, Curate, and all these different companies that are around circling in the media space, in entertainment and whatnot. So I thought it'd be kind of interesting to talk about some of the business models, because even though I'm pretty sure everybody listening here, especially if they're listening to this on this one streaming platform, knows Spotify, but they may not know what their other revenue streams might be outside of having to pay a subscription to even have access to it. So let's start there. What would you say? How has the media? Let's start with how the media landscape has really changed to going OTT. and just understanding what some of the new models have come about as a result of that. So let's start there.
And in terms of media, you're talking more about video first, or do you want to get into kind of the Spotify first?
And I mentioned Spotify, so let's go Spotify route. By the way, full disclosure, every name I just said, I am not a shareholder.
So Spotify, full disclosure, I am a shareholder. And they come from a different angle than what grabs most of the headlines in terms of the streaming and streaming entertainment. Streaming wars, I think, was very popular for about a year or so. But they have a very relatively simple business model. Their business model is to acquire users and subscribers, mainly to just consume their product, which is music, but they have a new vision of it being all audio, which was basically a strategy pivot, if you will, that they launched in early 2019, where they wanted to basically boost usage of their platform beyond just music. So mostly podcasting, but other forms of media within the audio space, the non-music space. And so they acquire usually customers who use Spotify for free. So there's an ad component there. But the ad revenue is still relatively small for the company. And what they do is over time, you use a product a lot, use it for free, you start liking it more, you're getting engaged, and you realize that if you pay for the subscription, it's a much better experience, especially on the music side, right? So no ads on the music side. And if you're a household with 3 members, 4 members, 5 members, it's probably better to get the family plan. If you're a college student, then pay for the college plan, which is a lot cheaper as well. And some of that is they have bundling partnerships across the world. But so that's really the strategy. And to layer that in, they say, look, we want to be ubiquitous everywhere, every device. If there's a new smart speaker that's released next year, we're going to be there. If there's a new Roku, if there's an Apple TV device, if there's a new car infotainment system, we want to be there. If we're on iPads, we're on every Android, we're on iPhones. They want to be everywhere, because if they're everywhere where the subscriber is, there's going to be that much of an advantage in terms of acquiring subscribers. So they're globally they're headed towards 400 million subscribers. I think they can reach that users next year, and roughly half of those could be paying or more. And it's a powerful business model because you have the data on your user. Your user constantly uses your platform. They know their habits. They can then negotiate as they grow scale. They can negotiate with their content providers. But in the music side, it's a tough business. They have to pay the major labels around, call it 70% of their revenues to the music labels. So that's why they want to expand just audio. And audio is when you think about the audio opportunity, they frame it as, and I think correctly, that the global radio business, which is ad based mostly, is about, they say, $40-50 billion advertising. I think in the US it might be in the low teens, billions of dollars, right? Everything's going streaming. Eventually, our kids and our kids' kids, they're not going to be necessarily tuning on this, FM 6 whatever or 945 or whatever channel to listen to a specific talk show host at a specific time, right? They're going to be streaming. And if you are a platform that all the audio entertainment in the world, and not only entertainment, but news, sports, everything, you can capture that, and you're a global player. It's a huge pie to take over. So it's an ambitious model. It's an ambitious company, but I think they're heading in the right way. They have the right leaders in the pivot of. One last point in the pivot towards non-music. They're experimenting, so they're getting exclusive content. So Joe Rogan, the Obamas, the Royals, Kim Kardashian, They have a deal with DC Comics. So what's interesting is books and comics are extremely popular medium, right? But think about how that changes in the audio world. So if a comic, you know, people got used to listening audiobooks and just somebody reading the book. But what if you can produce, if it's fiction, right? Have a production that includes sound, if it's different characters, different people reading those characters, if there's an explosion, having the explosion in the background. So when you think of a deal with DC Comics and what Spotify can do to innovate with them, it's really changing the way people experience the content. So
Yep.
it's pretty exciting if you go down that line and they add more exclusive content plus having every podcast in the world, because they basically want to be like, hey, we want every free podcast, any person, any high school kid on the street who just records something, they want to have everything, right? So they acquired Anchor, they acquired Megaphone to capture just all of the content. Then you layer that in with the premium exclusives that we talked about, all the music in the world, a free tier, a paying tier, with probably more experimentation in the future. And then you think about ubiquity and you think about being global. So Europe, Latin America, Asia, Africa, they're making a huge push. Obviously, the U.S. Then it's an enormous opportunity.
Huge.
And so
Huge.
when in Arevilo we bought Spotify, the market cap was around 45 billion, and you think about this enormous opportunity that they're going after, extremely focused. Yes, there's other players, right? But they have different business models that we can discuss, and there's some disadvantages and maybe some advantages as well. But I think the singular focus that Spotify has and the opportunity that they're trying to capture, I think it's going to be a great company to invest in.
So, this is something I thought about a lot when it came to Spotify and just even podcasting in general. And I know that this person has been, not so friendly to, or just kind of like, it's all about building the audience. But like, I remember when Howard Stern re-signed with SiriusXM for another 5 years, I was kind of convinced like, oh, this is the opportunity for Spotify to like really like just completely own everybody's ears right then and there, like completely own it, because I mean, whether you're a fan or not, I'm a fan personally, like he's how many people listen to it on a daily basis. I've been listening since I was a kid, like, can you imagine? I'm just curious from your perspective, why do you think he didn't make that leap?
I think I'm not an investor in SiriusXM, but I know the company really well because I've been an investor in the past via the Liberty structure. Why did he not go? Look, I think it would have been a brilliant move for Spotify to get him. There's no doubt in the world, and I think his audience would have actually expanded. But look, I think he still has a huge audience in SiriusXM. SiriusXM is an extremely well-run business, over 30 million subscribers, sticky, low churn. They have a high customer acquisition model. They treat him like royalty. Howard Stern, he works the amount of hours he wants. He has his team. It's like basically like a subsidiary of SiriusXM.
I mean, Spotify would have given him carte blanche too, right? I mean, Spotify.
Maybe, but I mean, look, I think reports are that SiriusXM is paying Howard Stern about $120 million a year. Spotify got Joe Rogan, I think, $100 million deal for 3 years. I think that what it's, if I'm not mistaken. So you're talking about 33 million-ish a year for Joe Rogan, who is the highest in demand podcast in the US and maybe in the world. And then if you're paying up for Howard Stern, 120 million,
yeah,
it's a lot, and you probably could have made a bunch of other, acquire the Howard Stern of Latin America, acquire the Howard Stern of Africa, acquire the Howard Stern of Europe, of Asia. And maybe that could have yielded that 120 million. No doubt in my mind, those, if it would have been great for Spotify. But maybe they felt like they didn't necessarily need him. Howard Stern is probably extremely happy with SiriusXM, how they treat him. More importantly, SiriusXM lives and dies under Howard Stern. Look, I think the 120. If you take away kind of the music cost that SiriusXM has to pay, and you say, look, they're paying Howard Stern 120 million, which I think was Bloomberg Report or the Wall Street Journal. I think that's like maybe like 30% of their non-music content budget. That's a lot. SiriusXM has NFL rights, NBA rights, basically most sports rights. They have a lot of talk shows that are not cheap. It's Howard Stern dominates that content budget, and they do it for a good reason, because he drives a lot of the subscription. And I think SiriusXM couldn't afford to lose it. It's basically like a broadcaster losing NFL rights in this moment in time. You're dead. So great for Spotify, but they also have a lot of other investments that they have to focus on. SiriusXM do or die. Plus, they treat him well, and Howard Stern is happy. He wasn't like he was unhappy. So I think that's why he stayed with SiriusXM.
You know, it would be the biggest coup ever is if, let's say, Apple decides to get into like the paid subscription game for podcasts or something, or for premium content, and out of nowhere they're just like 120. How about 500? Come over here. You do whatever the hell they got the cash. Why not?
Yeah,
that'd be huge.
It would be huge. I think here's the problem, and there are reports that Apple now wants to get into the paid podcast business. Whether they do or not, let's see. But I don't think you can sustain a paid podcast service without having basically every podcast, right? Because if you don't have every podcast, then you're banking on your entire budget to be on some really high demand shows that people will stick for. And that's not a certainty. And that's basically a bet. And the problem with getting every podcast on board is that you're going to have to tell every single podcaster who reads ads, hey, our model is better. Can you come here? But opt not to read ads. Forget about inserting ads, just people reading ads, the beginning of the pods, middle of pods, end of pods. So we're talking about from small podcasts to large networks like Vox Media, the Wall Street Journal, New York Times. The problem with that is, how do you compensate them? I'm pretty sure the New York Times makes pretty decent money out of podcasting. I'm not doesn't run, drive their business, but it could be it's in the millions of dollars in all likelihood. Something like The Ringer as well, which is Spotify owns, so doubtful, but right as well. So you're going to tell them, Apple's going to come out and say, like, look, $4 every podcast, ad free, and some huge exclusives. So to drive a subscriber base, you're going to need every podcast, compensate them, right? So they're going to have to take a chunk of that money, and it's going to be for the New York Times, for example, it has to be maybe even better than what they're getting from ads, because potentially you're reducing their audience, right, in that medium. So you're going to need to compensate every podcast. It might be some sort of variable percentage, which a hard model to make it work. And in addition, you're going to have to acquire some huge podcasts that also have to make a bet on your service, right? Because a reason why I think Spotify is being successful in acquiring, very large exclusive content is because they have, 300 plus million users, right? That basically listen to their service on a monthly basis. And content creators also want to be seen, listened to. So if Spotify is Apple's gonna give me a lot of money. Sure, if you're gonna pay me $10 million a year, I'll do it in a second. Anybody will do that for a second, but that's not sustainable. And then everybody else, hey, I actually want to be seen or heard. So you kind of need that flywheel. And that's why to acquire the subscribers, you need everyone plus the high paying one. So I don't know if you can make that model work, because look, if the New York Times won't go, the Vox Medias won't go, the Ringers won't go, and then the small podcasts won't go, because even you can make decent money, and then is Apple going to guarantee that? So it's difficult. It's difficult to pull off. Arguably, you would be an advantage in order to have a non-ad advertising based podcast subscription business. You would need an ad network, because you would be able to flip the switch with those same podcasts. If you're on the ad network, we can compensate you this way. If you're on the pay, we can compensate you this way. But if you're starting from scratch, right, a non-ad subscription podcast business, to attract the eyeballs, attract the content providers, is not easy. So, hey, if anyone has a shot outside of Spotify, I think probably Apple and Amazon, and they're putting resources, but it's not an important business for Apple, right? And Apple has a music app, they have a podcast app, they're investing pretty aggressively in their premium television app. It's not their focus. Arguably, combining the Apple podcast and music apps would help them. And then on the other hand, you have Amazon, who's trying to get into, they announced late in the year, I think the second half of last year, that the Amazon Music app was going to get podcasts, and they were going to add something like 70,000 podcasts. You think about Spotify and Apple already in the millions, right? And some exclusives, but not people who are really dedicated in the podcasting game.
Yeah, but
and then you have two apps in Amazon. Sorry, the Amazon Music, which now they're adding podcasts, and then you have Audible, which is also adding different exclusive podcasts and has a audiobook business model. So it's also not focused, and of course, it's not the main business for Amazon. So I think this focus that Spotify has, and free, paid, maybe adding other tiers over time, getting exclusives, adding every podcast, having all the music, having the best user interface. I think it pays off. That's paid off for them.
Agree. Hey, I'm not a shareholder, but I'm a big Spotify user. That's where I listen to all my podcasts, all my music. I'm just waiting for them to get live sports. I think that's actually an opportunity that I hope they're really exploring, because that'd be awesome. Like, I know there's times where, like, I can't, it drains my phone when I have, Fox Sports on or CBS All Access, watching a football game or something, or NCAA tournament when it's on. But, you listen to the audio version, it's not going to drain the phone as much.
Yeah, well, SiriusXM has a lot of those rights locked up in the US. And they come over time, and they're not cheap, but they're not, mega expensive either. I think it's something that they probably could eventually explore. They bought the Ringer podcasting network, and they also write a lot of really good articles, and they're Bill Simmons,
huge Ringer fan. Big.
Yeah, me too. Me too, and some of their binge mode and the watch pop culture content is also good. So it's not even the sports side, but Bill Simmons is a strategic thinker. I think that's why he made the Ringer so successful, acquiring, mentoring and acquiring very good talent, and making them basically cook, right? And I think he thinks about that long game. And there was an interview that he did after Spotify acquired the Ringer, and he's like, look, I want to win. This is a long-term big game to play. And so I wouldn't be surprised if Spotify goes down that route. I think it's a huge opportunity for them. Imagine they'll know which sports teams you like, so they can match you with the relevant podcasts. Basically, I'm a Washington football team fan, and unfortunately, but we made the playoffs.
You made the play. I'm a Giants fan, so you made the playoffs. Just be thankful.
Yes. So who's
going to be your quarterback next year? Who knows?
Who knows? Deshaun Watson. Well, but
that'd be a coup.
I think about Washington football team, right? The ESPN reporter for the Washington football team has his own podcast all about the football team. And the local radio shows that big fanatics of the football team, they all post it in podcast form. So if you acquire the audio rights to the NFL, for example, and it's a two-way connection. So SiriusXM is not necessarily getting all the data on its users and the demographic, right? You can cater the ads in between, when a team punts or in between quarters or halftime is way better. Spotify could do a halftime concert for even like a week 2 game, right? With their own content, with their own music. You can see how the getting the user data and the interactivity being an internet streaming based business, you can make that content extremely way better. You can, have this guy's a fantasy fan, so we'll give him fantasy information, at every ad break. If we know he's listened to a couple of games of one team, then we'll push all these podcasts that are focused on one team, because every single pro team has podcasts dedicated to those pro sports teams. Even if it's local radio, they'll upload it. So I think the opportunities are enormous, just getting usage and engagement, but the ancillary stuff of, okay, how we can do the halftime better, the commercials better, what other podcasts, what music can we put at this person who constantly listens to the sports on live on Spotify. They have a lot on their plate, right? They're going at 100 miles an hour globally, ubiquitous in every device, expanding, mentioned recently Africa and huge push there, acquiring different exclusive content in terms of podcasts globally. Some of it's crime thrillers and everything you can think about. So I'm not sure where in the list the sports rights are, but as they grow and as they get more data, as the Ringer becomes more integrated, it was just basically the Ringer was acquired right when the pandemic was going to hit, right? And
we forget.
Blew up.
It was less than a year.
It was when they announced their non-music push. It was, I think, February 2019, right? It's 2 years ago, basically. So, and they've just gaining momentum now, and with their first huge exclusive of Joe Rogan and Michelle Obama as well. So,
I got a question for you. Did in that interview with Bill Simmons? Did he ever talk about his model around getting some of these, well-known celebrities and former, NBA stars or NFL stars, on how he got them to host shows with them? Like, how does that model work?
In terms of like before Spotify acquired them?
Before and after, how, like, what are those deals? Do they get paid on, do they get paid? Who knows? It could be a marketing push because they have, they're the giant in the room now.
So I think it was basically an ad-based business for the most part. And some of his podcasts in the Ringer Network are some of the most listened to podcasts in the world, frankly. And so he gets serious ad dollars. Like, I think, Chase, State Farm, DAZN, all like big brands as well. And on a per episode, probably the Bill Simmons podcast alone, it's pretty decent money that can cover a couple of salaries. So then you launch other verticals and things like that. It was a startup. I think HBO was a minority shareholder. And so that helped as well. And apparently ran a good ship that could support, I think it might have been reported that they had tens of millions in revenue, probably under 50 million in revenue. And, it's not like they have a lot of employees, but it's not like, thousands of employees.
Yeah, so, they have a decent sized staff. It's not like it's small by any means.
And so you can do a lot with like 30 million in revenue, right? That's coming in advertising business. Bill Simmons doesn't have to pay himself, 5 million a year, right? He can take a million and then 20 million, 29 million to the whole staff and then growing. So not sure what the particular model of acquiring a talent was, but I think they had a good business model. But definitely saw an amazing opportunity to sell to Spotify, and I think it was probably a good deal for both sides.
Very good. All right. Well, I think we've covered the audio streaming wars pretty well. I mean, is there anything in particular that maybe we should highlight that we missed thus far before we shift to more the video streaming wars and really just talk about the Mandalorian for the next hour?
Yeah, off the top of my head, no, I think we covered a lot of
All right.
the bases there.
All right, good. All right, so hey, what did you think of season 3? Now, but so all right, now we're on to the video streaming wars, and we have our major players. We have our Netflix, Amazon, Hulu, CBS All Access, HBO Max. I mean, they're basically jockeying for all those same subscription dollars that we are available out there, right? I mean, has there been any business models in particular that have kind of stood out to you and that make a lot of sense for that platform? Or has it more or less all been the same and now it's just about like, all right, just get the best content and go?
I think there were a lot of headlines of a stream war, something mentioned earlier on, and I think it's fairly simple. I think Netflix is just a league of its own, and no one else is even close. I think the one who is getting close and will get closer is Disney. And I think the reason why Netflix is so far ahead, they started early, they had a vision, singular focus, driven management team, great culture, and they went after it and they acquired all the content that they needed to, licensing, shifting to in-house production. They went global quickly and over time, and then started as they expanded globally, created local content. So subscription model, no ads, simple user interface, hire the best people in tech to continually improve the product, hire the best people in content to continue to improve that side of the business. So initially they had people in house, then they hired some people, and now they're hiring the best people in Hollywood, quite frankly, and movies that they're releasing are the best actors. George Clooney just directed a movie for them. Leonardo DiCaprio is going to come out in a movie this year. Gal Gadot, which we discussed, is also coming out in a movie with The Rock later this year, I think. So basically, they just continually improve, continually invest in singular focus, global, and just made the service better, better, and better. And their strategy is also, we're just going to have so much content for you that your engagement is inevitably going to increase because you're going to be satisfied with the volume that we have. Granted, there's a lot of talk that they don't have the best content, yada, yada, but they need, in video, you can't mathematically acquire all content, right? But you need so much so that you have something to satisfy anybody all the time, constantly, every week. Obviously, it's not going to be all HBO premium high quality, right? But that, who cares, right? They can have a layer that is like that, but they can have a layer which is, trashy reality dramas, right? And then they can have a layer which is like sports documentary, and a layer crime, and a layer that's, a little bit of everything. And I think that's their model, and they've continually been underappreciated. Forgot to mention, I am a shareholder of Netflix, and I think when you think about, they have over 200 million subscribers, so households. If you think about the global, their target market is a global households with high speed internet, right? And that number is only going to increase. There's some reports it's excluding China, could be nearing 800 million and eventually approaching a billion households with high speed internet outside of China, right? In the medium term, I think it might be around 700 million today. And you think about them having 200 million subscribers. So That's not even half of the penetration, right? They have shown an ability to increase prices without materially affecting churn. And I think when you go down the route of a subscription model that's getting a monthly revenue stream from their users and a fixed cost content base, when you own the content, it's a fixed cost. It's not variable. Eventually, the free cash flow numbers become extremely interesting if the model works. And I think that singular focus has allowed them to achieve that. When you bring other players in, and I'm a shareholder of Disney, and I've been very bullish on Disney Plus. They had to move mountains, right, to get to the scale that they have over the first 13 months of Disney Plus being live. They've reached about 87 million subscribers. So that's incredible performance.
I mean,
what?
Oh, sorry.
And no, and largely with the library, because they weren't really able to add. They had The Mandalorian, which is an enormous success, but then 2020, which is they were supposed to add more Marvel series and other content, but a lot of it got this very expensive content that when you get shut down, it's you gotta like regroup. It's so hard, and basically 2020, you didn't have that much new content.
Yeah, I was about to say, like, what an amazing accomplishment for them. I'm not a shareholder of Disney, but what an amazing accomplishment it was for them to even get to 87 million with a pandemic, because that just speaks to the power of their library. And also, Marvel's huge. We joke about it, but it's huge. The fact that all the movies are on there, especially in the pandemic. I got halfway through my Marvel time frame of watching it. I still got a bit more to catch up, but it speaks to the library of content that they have, that they were able to, hey, we're not releasing anything because we just literally, a lot of the stuff isn't done yet. So hang with us. Here's the library. Here, we bought a couple of cool things, the Hamilton concert, or the Hamilton musical. Obviously the Mandalorian was amazing. But they were able to sustain that upon launch, right?
Yeah.
And now it's literally, they say, I think it was on the Investor Day, they said every week in 2021, you're going to get a new episode of original content, whether it's from a Marvel show or a Star Wars show. I mean, that's...
Yeah, so a couple of things there. The pandemic helped them. People are at home. They could try it. But you have to sustain it, right? So they eliminated the free trial for Disney Plus because they felt confident that people would pay and not churn out. So having that success with a very limited original content slate bodes very well for the future, because now in the Investor Day showed that they're draining all their resources to help Disney Plus. So 87. Some people joked on Twitter, 87 million subscribers with a beta product, essentially, because it's just a library. Yeah. It's not nothing. But why being a Disney shareholder actually made me bullish on Netflix, because I was saying Disney had to move mountains to get where they are today. So they had to acquire a company called BAMTech, which was the streaming operations of the Major League Baseball.
I remember that.
And I think they had to pay like over $3 billion, if I'm not mistaken, to get that done.
Bob Iger talked about that in his book. Like, he was very specifically talking about how huge that acquisition was for them.
They were like, should we start an operation from scratch or just buy the best tech we can get? They bought the best tech. They had the best franchises, right? But they didn't necessarily have the best TV production or as many franchises as they needed, or as global. So they needed to acquire most of the assets of 21st Century Fox, which included a beefed up studio operation in the TV space, but also in the film space. And it brought more franchises in, which is the Disney bread and butter. But it also brought the Star operation in India, which allowed them also to produce a lot of original content in India. That included an in-house streaming service, which they basically was it just the leading one in India, and they basically repurposed the premium tier of that service to be Disney Plus Hotstar, which is the service in India. It allowed them to gain control of Hulu, right? So they had a more adult oriented vertical in the US, a domestic business. And with that, they were able to bundle it with Disney Plus. And in addition to that, you're going to use a Star brand and a lot of the adult content that came from 21st Century and their content making capabilities, and use that to boost Disney Plus globally. So Disney Plus is going to be augmented in many markets. It's going to have like a Star icon, and there you can get more. You can see R-rated movies and things like that. It brought in National Geographic, the channel and the content production business, which has great documentaries, very very high quality, and some scripted programming, historical scripted programming, which has been pretty good as well, successful. It also brought in FX, which has the FX Studios, has the FX library. They put it all on Hulu. They basically put half of the FX slate. They could double the content budget for FX, and then half of the slate they put it directly to Hulu, and half just airs the next day on Hulu. After airing, on FX and on a pay TV linear channel, it'll go on Hulu the next day. So it augmented Hulu. So Disney had to do all this. They had to get the main studio super franchises that they have. So we're talking about Disney Animation and Disney Live Action, Pixar, Marvel, Star Wars. And they went to all the heads and say, look, how can you help us make the business Disney Plus even better? So Marvel had a TV business, but it wasn't really integrated into the Marvel Cinematic Universe. And now they're like a full TV production company. So this year, Marvel is releasing 6 original TV shows in the Marvel Cinematic Universe world into exclusively Disney Plus. And these are movie, quality productions, box office productions as TV shows. Star Wars, we know. They went to Mandalorian, having the Book of Boba Fett. They have an Ahsoka spinoff. They have a couple of other spinoffs that they're working on. Pixar is doing their first ever long form TV show, and they're adding way more shorts as well, and short form TV shows. Disney Animation is doing their first more longer form, also very very high quality TV shows, and they're adding some of the princesses, like Moana is having a TV spinoff in Tiana, and a couple others. So Disney Plus is making Disney up its game, but it also made Iger realize that they didn't have enough. And they were the biggest, and they were the best, but they didn't have enough, and they had to do these deals, and they've pulled it off. But like I said, they had to move mountains to do this, reorient the entire company, cut every licensing deal that they have. It's over. It's all going to our streaming service. It was a huge expense, right? They could have gotten their Netflix deal, the Disney Netflix deal, so all of the movies used to go to Netflix and most of the library. They could have that was ending, right? So they probably could have gotten like over $1 billion easy for that. Easy. So that's a tough revenue. You put a multiple on that, that's just cash coming in for the most part. You got to compensate artists and etc. But it's a lot of cash flow. They had to sacrifice that. They had to hurt their linear. They shut down the Disney Channel internationally is being shut down all over the world, and other cable channels. They've taken write-downs because of that. They're taking their marketing budget, just sinking it in Disney Plus. The launch was like huge. They partnered with Verizon in different markets. They partnered with the big in the Verizon in the US, in different markets, different telcos. They just sunk every nickel and bone and resources. Like, look, either we're successful in this, or we're not gonna be a good business long term, or maybe we won't even survive as a strong entity, right? We'll probably be very vulnerable, or someone will acquire us, or it will just be a declining business, and etc. But so they didn't think that way. And when you think what they had to do, and they achieved this, and they're going on their way to get to a Netflix level, and then you apply that to everybody else, you're like, whoa, that's going to be very tough to pull off. And then we can go
Yeah,
up by one of the other streaming services, but when you apply that type of thinking, it's just no. I'm very skeptical if other people can match
I'm
the
thinking the same
the
thing. The
enormity,
scale,
the
yeah.
the enormity of in scale and global scale. Will there be other services that'll get millions and millions and maybe tens of millions, and it'll be a decent business? Sure. But when we're talking about hundreds of millions of global subscribers, that's another ball game, and that provides other benefits as well, and can actually make it a true viable, huge free cash flow business. And and by the way, Disney acted as this was their do or die, but Disney Plus also makes their parks more attractive. And their parks, you go to the parks and you engage with the rides. You're like, oh, I want to watch this movie now. And where is it? Disney Plus. So it's a virtuous cycle. And if you go to the parks and you engage with Disney Plus, you're probably going to buy merchandising. You buy the merchandising and the toys and the products. Probably, when I have a 4-year-old son, when he uses it can be a Marvel toy, a Star Wars toy, any toy. He's like, oh, now I want to put the movie and while he's playing. And so that's the Disney model. Like everything feeds on everything, and Disney Plus supercharged the entire company, made the content better, made the business better long term, because owning a platform that has hundreds of millions of subscribers is going to have pricing power. They signaled in the investor day that they're going to be raising prices, raising their content
Already.
budget enormously. Yeah, already. And when you go down that line, the type of cash flows that they can make, it's just enormous. So I think when you apply that reasoning, we can go, and I think Amazon and Apple are a world on their own, because they're $1 trillion companies. They can afford to have kind of a side content business. But then when we think about the other players, it's just going to be such a tough road, given what Netflix and Disney have paid.
I mean, it's interesting. One of the reasons, I said the main purpose of today's interview was to talk about all the various different business models, but it really comes down to just breaking down each individual business, because especially in this media and streaming space, each one of them are coming at it from a totally different perspective. And, some are more successful than others, but it really has to do with where they were coming from to where they're now at today. I mean, you think about like HBO Max. Over the weekend, we've been trying to watch, what was it? The Flight Attendant. Really, really great show. I only watched the first episode, but we're hooked. And, you think about, we're not, the cord hasn't cut in our household yet. So we're watching HBO on cable. But when you try and watch HBO Max through cable, you can't. You have to, you look up online, you read everything. It's like, oh, you have to go download the app. And it's like, man, this is kind of annoying. Like I have to have a smart TV or have the Apple TV, and plug that in, so there's been different rollouts that have just been more difficult than others. Like I won't get pissed off about CBS. Like if I have to go and download the app to go and have access to their all access stuff like that, I'm used to already going on my computer and doing that. So the way HBO did it seemed like there could have been a better way, rather than like you want to access the content, you want to watch it like on demand or something, and now it's not there because you have to go on HBO Max. It's so annoying.
HBO, it's almost as if they probably should have just started with a different brand name and added the HBO content and the Max quote unquote content and go from there. And they have a lot of obstacles for various reasons, but the main one is they're trying to shift. They have such a relatively large base of pure HBO linear cable subscribers that they don't want to necessarily harm that. So they wanted to transfer that over into HBO Max. So they created a new app with the Max. It confused people. It was tough to negotiate with the Comcasts of the world in order to agree on terms, because you're basically shifting the business. On top of that, HBO was available in these so-called channels, uh, TV streaming channels. And I know I'm putting air quotes on the word channels, because you can go on Amazon Prime Video and then via Amazon Prime Video subscribe to HBO. So you get all the HBO content integrated into Amazon Prime. The same is available with Roku, Apple TV, and even Hulu. So they had to undo that. They had to teach consumers to use the HBO Max, take deals, to reorient that, right? And HBO was already at a pretty high price. I think the ARPU was, $14, $15, and you got Netflix that's cheaper, right? Disney Plus that's way cheaper, and you're asking them to pay a lot for this service that people think they know. So if I go to someone in the street, hey, HBO Max, so it's HBO, right? I don't want to pay for that. I mean, it's great. I like Game of Thrones, but then I turned off or whatever. So they basically had to kind of teach the consumer step by step, kind of technical. It's a challenge though. My parents, for example, subscribe to HBO. I'm not sure, very well educated, smart people, but they're not reading the business. Well, my dad is, right, so it's a bad example, but take a normal group of parents, but they're not necessarily reading the Wall Street Journal and watching the HBO Max Investor Day and understanding all this, the typical middle-aged kind of couple or household. They're not understanding these things, and then downloading the app. Oh, I have to use my Apple TV to get the content that I'm already paying for with DirecTV or whatever. It's a mess, right? It's a mess, and it gets even more complicated when you think about HBO in the global level, because they have some deals in many parts of Europe where they essentially take all of their content, all of the HBO content, and they license it to Sky, which is a satellite but also IP-based pay TV company, but also internet and wireless seller as well, and that's owned by Comcast, right? And they sold all the HBO content to Sky, and then Sky has their own brand called Sky Atlantic, which is another channel where they house all that content. So if you live in London, or Germany or Italy, and you want to watch Game of Thrones, you don't necessarily know that it's an HBO show. It's a Sky Atlantic show. And those deals were re-upped right even after AT&T bought Warner. And if I'm not mistaken, they go through 2025. So until 2025, HBO Max in a significant way is not going to have a huge subscriber base in Western Europe and the big economies there. In Canada, they have a similar deal in Canada. In Latin America, they needed to acquire partners. It was a little bit fragmented TV model. And then in Asia, it's probably very similar as well. So they need, and it's not clear that they have the content to necessarily attract those markets either. So in the US, you're investing a lot to get consumers to use a product because it's so confusing. So they disrupted their film slate, which you could argue was a good move. I'm not sure it was as well executed, right? But we can argue the quality of Wonder Woman 2, but it was a highly sought out movie, and they put it on HBO Max, and I think that feels okay. I think now I understand what HBO Max is. It's different than HBO. It's a different product. But they're also gonna so because of that, I think it helped them. But then it's the entire slate. So right, it worked with Wonder Woman. Let's see how it works with the next movie and the movie after that.
Dude, they should do what Disney Plus is doing. Just cut the cord. Yeah. Cut the cord. Warner Media, put it all. Just go all in. They have the assets. I mean,
they have. They do
some of the most bingeable stuff.
They do, and a lot of it is on HBO. The HBO Max library is very, very good. It's just they didn't have this necessarily do or die kind of culture. They have a new CEO who was the ex-CEO of Hulu, and kind of in some ways known as like the father of Hulu, and Jason Kilar, and he's very focused and very tech driven, and apparently he was the one who caused them to put Wonder Woman and some of this huge content on HBO Max. But it's not easy. When you think of the global space, it's even harder, right? Because some of the deals are locked up, right? And not only that, they want to layer in a ad-based tier. So I'm not sure how that's going to work either. So it's a little bit all over the place, and I think they'll get a good amount of scale, but I'm not sure they'll be able to kind of catch up there to the Disney Plus, Netflix level. They're handicapped in some markets; they just can't really be in there. But just having, you think about originals really drive this. And I was reading today that the Mandalorian was a huge driver in Indonesia, right? A market that apparently Star Wars didn't do as well in the box office with the recent movies. We're talking about really, really like content that's universal for Disney and franchises is extremely well executed on. So the Mandalorian even did well in markets where you would never think about it doing well. The Flight Attendant on HBO Max is probably not going to do well in Indonesia, right? They're going to need more local programming there. They might need, like, Game of Thrones. People in Europe watched it already, mostly via Sky, right? They're going to need a lot of original content that they have to be pretty darn sure it's going to drive usage.
It has to be more ubiquitous.
Globally. Yeah. And that's very, very hard. That's very, very hard. And it's becoming like, it's getting to the point, like, what was the point of this AT&T acquisition anyway? It was an experiment, acquiring DirecTV. And this is a side conversation we can go hours on, but it was AT&T bought DirecTV because they saw that Comcast was trying to acquire Time Warner Cable, which obviously they didn't succeed, and Charter bought them. But AT&T decided they needed scale, so they got DirecTV. And then they decided they needed content, so they got a Time Warner, which rebranded as Warner Media, which is where what owns HBO. And now they're doing the streaming service, and they're acting in a way that, yes, aggressively, they have to untangle a lot of things. I'm not sure if it's going to be successful, but it's not going to be the thing that's going to drive the wireless subscribers for AT&T necessarily. So what was the point of it all? And then we're at a point where, maybe they need to beef up, right, in order to actually be successful. And I think that's what Disney realized, but they realized this like 4 years ago. And that's why they are where they are today. And you think about a Peacock, which is a streaming service for Comcast. It has a free tier, then ad-based, and no ads. They have a lot of signups. A lot of them is probably in the Comcast broadband market, which everybody who's a subscriber to Comcast broadband or pay TV gets Peacock. But when you think about their content, where is it, right? Something I thought about when analyzing Disney Plus, like, are they really cutting the Netflix licensing deal, the global licensing deals, and they work? When you look at Comcast, which is parent of NBC Universal, which owns Peacock, where is their best content? So I think about the family animation, right? So they own DreamWorks, they own Illumination, so the Minions and Trolls and all that really high quality content that does really well for them. Illumination content is mostly licensed to Netflix, so next Illumination movie that goes to theaters is going to go to Netflix after. And then the DreamWorks content is going to Hulu. And then you think about some of their best high quality IP, like Jurassic World, right? Fast and the Furious. They started making animation shows for Jurassic World and Fast and the Furious, and they licensed that to Netflix. They license other content to Hulu. So your best content is not on Peacock. Your best sports rights not on Peacock. Some sideshow Olympic shows will drive users is going to go there eventually. We have the Olympics this year, but the best content is not there. It's not clear they want to kind of put it all there, or can actually get the audience and also make it worth it, because that's important as well. Because they don't have the usage yet, and in addition to that, it's it's not an all-in, right? It's sort of like another linear channel for them. I think that's how they kind of view it, as a broadcast network of the future. That's what they've said, and it's not clear that there should be a broadcast network of the future. I mean, you want the best free content for video, just go to YouTube, really, for the most part.
That's a conversation for a whole nother day. You want to talk
so
YouTube,
no,
man.
and you look at and YouTube is, I mean, look how Cobra Kai did on Netflix versus YouTube, right? And YouTube has more usage than Netflix, so that's also to the benefit, and it shows the strength of Netflix. But Peacock, one of their best rights that they used to license to Netflix was the Office, the TV show. Yeah. And what was interesting is that once The Office left Netflix a couple of weeks ago, now they put it on Peacock. But apparently the amount of iTunes purchases of The Office went through the roof. It's not clear that those people who love, there are super huge fanatics of The Office and they'll always watch it, right? But you can buy all, I think 7 seasons, or it's for $20-$25. If you're a true fan, just do that versus subscribe to Peacock. And it was doing a lot of usage on Netflix. They were getting really, really good money. I'm not sure that they helped their cause. So we'll see. They could have a good business, like we talked about. They can get tens of millions of users, subscribers, something like HBO as well. But are they going to get to that hundreds of millions of subscribers? And I think what you need to do to get to that level is so hard.
Even for them,
just makes me, even for you think about Universal, Warner, Disney. Those are studios that have been around almost 100 years, right? So they're great content businesses, but even for them, like you just said, getting to that global domination is extremely, extremely hard. And when you're competing with Netflix releasing tons of shows and tons of movies basically every day or every week, in tonnage, right? Disney's very, very high quality, very, very franchised, global appeal, fan base weekly. Netflix is tonnage weekly or daily, right, almost. And then you think about everybody else. How can I be differentiated enough to compete, not only US but globally? Is so hard. I mean, we'll see. It'll be very interesting. But nobody uses the streaming wars headlines anymore because they just know it's, for now, Netflix, and then Disney has done extremely well, and then the others we'll see.
Yeah. So my final question for you today, because look, we're a microcap show, right? We like to talk microcap investing strategies, all investing strategies, but we just held an event, a virtual event covering Canadian microcaps, and we actually did a panel about the future of media, the media landscape, and how because this was all about Canadian listed companies and how they could take advantage. We had 3 media companies on there participating, and it got me thinking into especially when talking to you today, is talking about the future for these publicly listed entertainment and media companies and where their place is in this ecosystem now. The more I think about it, the more it's like, okay, can they build their own network and channel for this? Or, I mean, would it have to just be really, really niche in order to see some kind of success? Or is it better to be on the other side and just produce high quality content for these big streaming players that can, will go and buy it, or sign contracts with them to create multiple seasons? I don't know. What do you think about that?
Sure, I'll give my thoughts, but first, I forgot to mention, since we talked about Peacock, I am a shareholder of Comcast, because I know the full disclosures here.
Thank you, sir.
And we'll, going ahead, look, I think you have to be very, very niche. It's not only video, but all type of content. If you want to succeed at a smaller scale when you compare it to, say, a Netflix or Spotify, and you think some people are done really well with subscription type of newsletters, and you see Ben Thompson with Stratechery makes millions, and he's basically a one man show writing weekly analysis on strategy in the tech industry. And when you think about video content, there are YouTube networks that can do really, really well. So if you don't know about him, you'll probably know about him in the future with your daughter. This kid Ryan on YouTube, who basically parents just record him opening and playing with toys, and it's become this whole almost franchise. And now my wife the other day bought toothpaste, and it was Ryan's World branded, and that's an operation that they make tens of millions a year, right? I think cumulative, they've made that family has made over 100 million based YouTube ads and licensing, and it's just, their parents, they got obviously better at the production quality over time, but it started with just recording their kid opening and playing toys. But when you think about a business and you have to invest millions and millions and millions of dollars, it's not, you can't really be niche. And we're at a world, right, that the amount of content that's being produced on the television and movie side is so much. You think about globally, it's just tonnage and tonnage and tonnage and tonnage. You can't really stand out unless you are niche and can succeed at that level, or a huge major franchise, kind of like a Marvel, right? So there was this book called The Hitmakers, Derek Thompson, who writes for The Atlantic. And he talks about this, right? Just how do you stand out in a world where there's so much content and quality and branded and very, very, very high production values and very, very well executed. And you can't be a small business anymore to play in that game. So I think there are a lot of the smaller players that I think can find their niche and can do well. And I think recently via a SPAC, the founder of Discovery started a streaming service called Curiosity Stream. It's nicher, it's cheaper, and it went public, and it's not a big business. And those could potentially do well. I'm not a shareholder, but it's tough, right? Because history, natural based documentaries, and Discovery does the same thing. Disney with National Geographic does the same thing. Netflix can invest in that on a dime and get more viewers globally in seconds. So it's really tough to compete. So one way I would think about it, can Netflix, if you have a more niche or smaller business, can Netflix replicate that and do way better, right? So, and the answer is yes. Then you either need to consolidate or maybe over time it's just going to be a worse and worse business.
No, you know what I've been noticing, especially in microcaps, is the companies that are, really making a push and starting to gain some traction are really operating in the children's content space. Creating animated shows, or not so much live action, but mostly on the animation side, because that seems to be where you can create the most. I've said this once already. It's my word of the day: ubiquity. In terms of something that can appeal to, obviously as parents ourselves, like we're going to want content for our kids that they'll enjoy, learn from, of course. But at the end of the day, it's also nice if we can enjoy it.
Yeah, I mean, there are some of those businesses. I think the producer of Coco Lemon was acquired recently, and they make a lot of kids animated, cheaper production, but very highly entertaining for kids content. And it's I think is one of the top channels on YouTube. It gets, the viewer numbers are ridiculous if you check them out, and they've also licensed to Netflix. So there are verticals that you can succeed if you align the cost structure and the opportunity set appropriately, for sure.
All right, Francisco, we're there. So we're gonna have to have you back on. I didn't even get to ask you some of my baseline questions that I ask everybody. So definitely gonna have you back on at some point. But with that, where can my audience go and find everything they need to know to follow along you and Arevilo?
Following me on Twitter, I'm active, not super active, but constantly on in terms of posting, I'm constantly on daily. But on Twitter, my handle is at Franco Olivera. So happy to engage with people there. I'm also on LinkedIn. And yeah, happy to chat investing or streaming or anything in general.
With that, Francisco, thank you so much for joining me, man. This is a lot of fun.
Awesome.
And stay safe. Good luck. Talk to you soon, man.
Thank you so much. It was a blast.
All right. Talk to you.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap Podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.